Hi everyone, this is Dr. P. Malatlata, working as Assistant Professor of Economics, Government Degree College, Vardanpeta. Now I am going to explain about the Indian banking history in this class. How Indian banking history originated and what changes came into this banking system. Now we will discuss here. Modern banking in India originated in the last decade of the 18th century. Among the first banks were the Bank of Hindustan, which was established in 1770 and liquidated in 1829 to 32, and the General Bank of India, established in 1786 but failed in 1791. The largest and the oldest which is in still existence is the State Bank of India. Now we call it as SBI. It is originated and started working as the Bank of Calcutta in mid-June 1806. In 1809, it was renamed as the Bank of Bengal. This was one of the three banks founded by a presidency government. The other two were the Bank of Bombay in 1840 and the Bank of Madras in 1843. The three banks were merging in 1921 to form the Imperial Bank of India, which upon India's independence became the State Bank of India in 1955. For many years, the presidency banks had acted as quasi-central banks, as did their successor until the Reserve Bank of India was established in 1935 under the Reserve Bank of India Act 1934. In 1960, the State Banks of India was given control of the 8 state associated banks under the State Bank of India, called as subsidiary banks. Act 1959. These are now called as its associate banks. In 1969, the Indian government nationalized 14 banks. The Indian banking sector is broadly classified into two types. One is scheduled banks and another one is non-scheduled banks. The scheduled banks are those included under the second schedule of the Reserve Bank of India Act 1934. The scheduled banks are further classified into nationalized banks, State Bank of India and its associates banks, regional rural banks, foreign banks, and other Indian private sector banks. The SBI has merged its associate banks into itself to create the largest bank in India on 1st April 2017. With this merger, SBI has a global ranking of 236 on Fortune 500 index. The term commercial banks refers to both scheduled and non-scheduled commercial banks regulated under the Banking Regulation Act 1949. Generally, the supply product range and reach of banking in India is fairly mature, even though reach in rural India and to the poor still remains a challenge. The government has developed initiative to address this through the State Bank of India expanding its branch network and through the National Bank for Agriculture and Rural Development NABARD. Colonial era, banking in colonial era. During the period of British rule, merchants established the Union Bank of Calcutta in 1829, first as a private joint stock association, then partnership. The proprietors were the owners of the earlier commercial bank and the Calcutta Bank, who by mutual consent created Union Bank to replace these two banks. In 1840, it established an agency at Singapore and closed the one at Mirzapur that it had opened in the previous year. 1840, it established an agency in Singapore and closed the one at Mirzapur that it had opened in the previous year. Also in 1840, the bank revealed that it had been the subject of fraud by the bank's accountant. Union Bank was incorporated in 1845 but failed in 1848. Having been insolvent for some time and having used new money from depositors to pay its dividend. The Allahabad Bank, established in 1865 and still functioning today. It is the oldest joint stock bank in India. It was not the first though. That honor belongs to the Bank of Upper India, which was established in 1863 and survived until 1913 when it failed, with some of its assets and liabilities being transferred to the Alliance Bank of Simla. Foreign banks too started to appear, particularly in Calcutta in the 1860s. Greenlay Bank opened its first branch in Calcutta in 1864. The competitors Escompt de Paris opened a branch in Calcutta in 1860 and another in Bombay in 1862. Branches followed in Madras and Pondicherry, then French possession. HSBC established itself in Bengal in 1869. Calcutta was the most active trading port in India, mainly due to the trade of the British Empire and so became a banking center. The first entirely Indian joint stock bank was Awadh Commercial Bank, established in 1881 in Faizabad. It failed in 1958. The next was Punjab National Bank, established in Lahore in 1894, which has survived to the present and now one of the largest banks in India. Around the turn of the 20th century, the Indian economy was passing through a relative period of stability. Around the 5 decades has elapsed since the Indian rebellion and the social, industrial and other infrastructure had improved. Indians had established small banks, most of which served particular ethnic and religious communities. The presidency banks dominated banking in India, but there were also some exchange banks and a number of Indian joint stock banks. All these banks operated in different segment of the economy. The exchange banks mostly owned by Europeans concentrated on financing foreign trade. Indian giant stock banks are generally undercapitalized and lacked the experience and maturity to compete with the presidency and exchange banks. This segmentation led Lord Curzon to observe, in respect of banking, it seems we are behind the times. We are like some old fashioned sailing ship divided by solid wooden bulkheads into separate and cumbersome compartments. The period between 1906 and 1911 saw the establishment of banks inspired by the Swadeshi movement. The Swadeshi movement inspired local businessmen and political figures to found banks and for the Indian community. A number of banks established then have survived to present, such as Catholic Syrian Bank, the South India Bank, Bank of India, Corporation Bank, Indian Bank, Bank of Baroda, Canara Bank, and Central Bank of India. The favor of Swadeshi movement led to the establishment of many private banks in Dakshina Kannada and Udupi districts, which were unified earlier and known by the South Kannada district. Four nationalized banks started in this district and also leading private sector bank. Hence, undivided Dakshina Kannada district is known as cradle of Indian banking. The inaugural office holder was the Britisher Sir Osborne Smith, 1st April 1935, while C.D. Deshmukh, 11th August 1943, was the first Indian governor. On December 12th, 2018, Shakti Kant Das, who was the finance secretary with the Government of India, begins his journey as the new RBI governor, taking charge from Urjit R. Patel. During the First World War, 1914 to 1918, through the end of the Second World War, 1939 to 1945, and 2 years thereafter, until the independence of India, were challenging for Indian banking. The year of the First World War were turbulent and it took its toll with banks simply collapsing despite the Indian economy gaining indirect boost due to war related economic activities. At least 94 banks in India failed between 1913 and 1918. During 1938 and 46, bank branches offices trebled to 3469 and deposited quadruplated to 960 crore rupees. Nevertheless, the partition of India in 1947 adversely impacted the economies of Punjab and West Bengal, paralyzing banking activities for months. India's independence marked the end of the regime of the laissez-faire for the Indian banking. The government of India initiated measures to play active role in the economic life of the nation, and the industrial policy resolution adopted by the government in 1948 envisaged a mixed economy. This resulted in a greater involvement of the state in including different segments This resulted in great involvement of the state in different segments of the economy, including banking and finance. The major steps to regulate banking included in this policy. The Reserve Bank of India, Indian Central Banking Authority, was established in April 1935 but was nationalized on 1st January 1949 under the terms of the Reserve Bank of India transfer to Public Ownership Act 1948. In 1949, the Banking Regulation Act was enacted, which empowered the Reserve Bank of India to regulate, control, and inspect the all other banks in India. The Banking Regulation Act also provided that number of new banks or branch of an existing bank could be opened without a license from the Reserve Bank of India, and no two banks could have common directors. Nationalization in 1969 and 1980. Despite the provisions, control, and regulation of Reserve Bank of India, banks in India, except the State Bank of India, remain owned and operated by private persons. By the 1960s, the Indian banking industry had become an important tool to facilitate the development of the Indian economy. At the same time, it has emerged as a large employer and a debate had ensued about the nationalization of the banking industry. Indira Gandhi, the then Prime Minister of India, expressed the intention of the Government of India in the annual conference of All India Congress meeting in a paper entitled Stray Thoughts on Banking Nationalization. Thereafter, the Government of India issued the Banking Companies Acquisition and Transfer of Undertaking Ordinance 1969 and nationalized the 14 largest commercial banks with effect from the midnight of 19 July 1969. These banks contained 85% of bank deposits in the country. Within 2 weeks of the issue of the ordinance, the Parliament passed the Banking Companies Acquisition and Transfer of Undertaking Bill, and it received presidential approval on 9th August 1969. A second round nationalization of 6 more commercial banks followed in 1980. The stated reason for the nationalization was to give the government more control on credit delivery. With the second round of nationalization, the Government of India controlled around 91% of the banking business in India. Later on, in the year 1993, the government merged New Bank of India with Punjab National Bank. It was the only merger between nationalized banks and resulted in the reduction of the number of nationalized banks from 20 to 19. Until the 1990s, the nationalized banks grew at a pace of around 4% closer to the average growth rate of Indian economy. Liberalization in 1990s. In the early 1990s, the then government embarked on a policy of liberalization, licensing a small number of private banks. These came to be known as New Generation Tech Savvy Banks and included global trust banks, the first of such new generation banks to be set up, which later amalgamated with Oriental Bank of Commerce, UTI Bank, since renamed Axis Bank, ICICI Bank, and HDFC Bank. This move, along with the rapid growth in the economy of India, revitalized the banking sector in India, which has been rapid growth with strong contribution from all the three sectors of banks, namely government banks, private banks, and foreign banks. The next stage for the Indian banking has been set up with proposed relaxation of norms for foreign direct investment. All foreign investors in banks may be given voting rights that could exceed the present cap of 10% at present. In 2019, Bandhan Bank specifically increased the foreign investment percentage limit to 49%. It has gone up to 74% with some restrictions. The new policy shook the banking sector in India completely. Bankers till this time were used to the 464 method. It means borrow at 4%, lend at 6%, go home at 4% of functioning. The new wave ushered in a modern outlook of tech-savvy methods of working for traditional banks. All this led to the retail boom in India. People demanded more from their banks and received more. If we look an overview of Indian banking, by 2013, the Indian banking industry employed 1 crore 17 lakhs 5,149 employees and had a total of 1 lakh 9,811 branches in India and 171 branches abroad, and manages an aggregate deposit of 67,504.54 billion and bank credit of rupees 52,064.59 billion. The net profit of the banks operating in India was 1,027.51 billion against a turnover of rupees 9,148.59 billions for the financial year of 2012 and 13. This is the Indian banking history, how it established and what changes it take and how these banking regulations and acts implemented. In next class, we will discuss about the banking, money and credit creations. If you like this class, kindly like, comment and share and subscribe my channel. We'll meet in another class with a new topic. Thank you. One and all. Malati Lata.